Hey guys, welcome back. It is Friday, May 22nd. It's after hours. It's 7:20 p.m. Eastern Time. And just taking a look at the big board, it looks like it was kind of a sideways day again today. Mixture of red and green on the board. But if you take a look at the percentages, there weren't many big changes either way. So it looks like about 1% or so plus or minus for the big stocks. So again, like I said in my last video, this is great for theta gang plays. So plays where you're just milking time and making money as stocks trade sideways. This was a perfect day. And if you keep watching, I'll let you know what my positions did this week and how much money I made this week. So let's take a look. If you remember from my previous videos this week, you know I have some contracts on AMD. I had sold some puts at the $52 strike price. So AMD not only traded sideways for half the day, but then rose even more for the second half of the day, which is fine by me. Looks like it's still trading above $55 after hours. So my $52 puts are safe, and that means that I collected a total of $44 in premium by selling 2 contracts of the $52 puts earlier this week. So I'm plus 44 on AMD, and I have no shares that were assigned of AMD. And in total, I don't own any of AMD right now. But I would like to, but I want to own them for a low price and for a good price. I want to buy AMD on sale. So let's say come Tuesday of next week, because remember Monday is Memorial Day, so the market is closed. I mentioned in my last video yesterday that if AMD still trades around 54, 55, I want to be looking at the ideally sub $50 strike price, but it looks like the premiums aren't that great right now. So I think I might end up getting into the $51 or $52 strike, probably 52, because I like the 85% chance of profit range because it gives me a good risk to reward ratio, meaning has a good chance of closing out of the money, but also gives me a decent return on my risk. Let's just calculate really quickly what that would be. So that'd be $27 divided by 5,200 because I have to buy 100 shares, and that's about a 0.5% return on my risk, and that's fine for me because it's a relatively safe bet. So I mentioned in my previous videos that I like to get at least a 0.4% return on my risk every week, and if I can do that for 52 weeks out of the year, that would calculate out to a little bit more than 20.8% return on my money over the course of a year. And I think currently, in the current market conditions with relatively high volatility, I can easily get 0.4%. So this one is looking good right now, the $52 strike price. But again, we'll check what the premiums are when the market opens Tuesday morning. So we'll keep an eye on that. And just taking a look at the chart again. So, we talked about Fibonacci levels, and I've gotten a lot of requests to make a video explaining the Fibonacci retracements. So I'll be making that this weekend. And if you have any other requests for videos, please let me know because I need some more ideas. But we mentioned before that this 54 and some change, or 54.75, let's just say, Fibonacci level has kind of been the support level or the basement, if you will. And as you can see, AMD kind of dipped below, but then bounced right back up and closed above that level. So we're kind of fighting for this level right now, where AMD is kind of trading above and below. So it's really to be determined whether AMD wants to stay above, let's say, $55, or likes to trade in the $51 to $55 range. But either way, I think if I buy a put at $51 or at or just below this level, I should be safe for next week. So I'm really liking that $51 strike price right now on AMD. Now, if you remember from my other videos, I had an IWM contract on. I sold a put at $123. So, IWM, I was not worried about this stock, and I was not worried about my position at all because it traded a little bit sideways, but actually ended up the day in the green at over $134 per share. So my contract was safe. I just collected premium. I did not get assigned any shares, and I had sold that contract for $60 in premium. So I made $44 off AMD, and I made another $60 this week off IWM. So let's just take a look at my potential play for next week on IWM. So again, looking at this chart. So based on the Fibonacci retracements, IWM should trade roughly between 127 and 135. So you can see it's been trading very close to the ceiling or to this resistance level. So chances are next week it'll probably bounce down, or it could break through if there's a lot of good news this weekend. So that's to be determined. We'll see what happens come market open, and we'll have to keep an eye on this stock over the weekend just to see what it does. But just again, reiterating the fact that it looks like the support level is at $127. So in my mind, I'm thinking about now selling a put at 127 or less. So let's see what kind of premium I can get at the $127 strike price for next week. So $66, not bad. Again, not bad, 85% probability of profit. So let's just do a quick calculation. $66 divided by 12,700 in collateral I would have tied up. So that is also a 0.5% return on my risk, just like my potential AMD play. So I'm liking this as well. If you remember from my previous videos, I actually ended up owning 100 shares of IWM at 127 and was able to sell it the very next trading day for a quick profit. So I'm really liking that strike. Ideally, I'd want IWM to drop a little bit this weekend and open Tuesday morning a little bit lower, just so I can get a cheaper strike price. But again, we'll take a look Tuesday morning when the market opens and see what happens. And then the last option play I had on was Space or Virgin Galactic. And if you remember, I kind of got lucky with these positions because someone was trying to buy $8.50 strike puts, and I saw that when I was looking at the options chain, and I was more than happy to sell them because in my mind it was easy money. So actually I had sold 3 contracts of Virgin Galactic at the $8.50 strike price. And as you can see, Virgin Galactic clearly ended the day above $8.50, almost double that value. And so I had sold those contracts for $4 each. So I collected an additional $12 in premium without getting any shares inside of Virgin Galactic. So all in all this week, if you saw my video this past Monday, I'd highly recommend you go back and watch it. It's actually one of my more popular videos just because I had the best gains in a single day so far. I was assigned shares of IWM at a cost basis of $127 per share, and I had 100 shares. So that was $12,700 in collateral that was tied up, and I quickly sold that for a profit of $445 on Monday morning. So we'll just talk about all of my collateral that was at risk this week, and then I'll go back and add up all of my premiums, and then we can do a division to determine what my total return on capital was for this week. So I had $12,700 in IWM shares at risk. I had 2 contracts of AMD, and they were puts at the $52 strike, so that's $5,200 plus another $5,200. I had 1 put on IWM at the $123 strike price, so that's $12,300 at risk. And then I had 3 puts on Space at $8.50, so that's $8.50 times 3. So this week, in aggregate, I had $37,950. That was my collateral that was in play. And over the course of the week, I collected $445 in stock appreciation on my IWM shares because I sold those 100 shares Monday morning. I just told you I collected $44 in premium for this week on AMD. I collected another $60 in premium on my IWM position for this week. And then I collected a total of $12 in premium on my Space contracts. So total, I collected $561 in premium this week. So if I divide that by my total cash that was at risk, that's $37,950. My return on risk, or my profit this week, was almost 1.5%. Not too shabby. I think I'm going to hold off on Space just because taking a look at the chart, again, it's been trading in this red area for a while now, between a top value of about $17 and a bottom value of about $9 and some change. So unless I can get another freebie on Space sub $10, I think I'm going to hold off on any Space trades unless something catches my eye. I mentioned in my last video I was looking to get into Micron MU, and I'm liking this stock more and more because it's a similar company to AMD, and I also like where its premiums are right now, and I like where it's trading because Micron closed the day at, let's take a look on Robinhood. So Micron closed the day at 45. It actually ended up in the red, which is fine by me because that means I can lock in a lower strike price hopefully Tuesday morning. But Micron ending at 45, it's been trading in this kind of darker green Fibonacci level between roughly $43 and $46. And right now it's kind of smack dab in the middle. So I think if I can sell a put below 43, and I was actually thinking about a $42 put, which is all the way down here, I should be safe for the week in terms of not getting assigned shares. And just take a look at this graph. The last time Micron traded at 42 was this quick dip, and that was back in mid to end of April, April 22nd. So I think I have a good chance of Micron staying above $42. The last dip here was $42.50, and that was back in mid-May. So I think a $42 put would be a good play on Micron, and I'm really liking that play for next week as well. So let's just take a quick glance. If I do $42, it's $22 in premium. Again, 86% chance of profit, which I've been liking so far. So $22 divided by a collateral of 4,200 times 100 to make it a percent. So again, a 0.5% return on my risk. I'm happy with that. You know, I might, if I'm feeling a little bit risky and the return on my risk is worth it, I may go up to the 42.50. Let's just calculate that out. It's probably going to be 0.6%. Let's see, $29 divided by 42.50 is, yep, almost 0.7%, 0.68%. So let's see how I feel Tuesday morning, see where the stock is. I might do a $42 strike. I might do the 42.50 if I'm feeling a little bit risky and I want to milk an extra $7 in premium for that week. But yeah, I mean, if all three of these plays I suggested next week work out and I can collect the 0.5% return on my risk for the week, that's pretty good because again, that would annualize to over 26% return if I can get a consistent 0.5% every week, or at least average 0.5% every week over the course of a year. But those are what I'm thinking about for this coming week. Like I said, this weekend I'm going to try and make a heavily requested video on these Fibonacci retracements and how to use it and how I trade with them. As always, if you have any questions or comments, leave them below. I've been answering every single question and comment so far. And let me know if you made any plays this week. How did you turn out? Were you profitable? What was your percent gain for the week? And as always, happy trading.